I'm not making this video to talk junk or to brag. I'm making it because I'm trying to help you. Check this out.
Car payments have reached record highs in recent years, and Americans are feeling the pinch. The average payment on a new vehicle rose 40% between April 2019 and April 2024.
Some people will look at this and they will say, are you kidding me? I mean, that's basically a house payment for a lot of people.
You know, we always had this idea that a new vehicle was something that was attainable for every American. Well, clearly we've moved away from that premise.
I like to live in reality, so let's keep it a buck. There are a lot of people here who would tell you not to be materialistic, but the fact is right now, that's American culture. We've all been raised to look at these particular things. That doesn't mean it's right. Me personally, I would say do all things in moderation. With that being said, I know you want to look good in your car. If you're a young man, young woman, whoever you are, you definitely want to look good when you're riding around town.
And finally, consumers want fancier cars, and car makers have capitalized on that.
Because structurally, the industry has been headed to this direction for many, many years. They've been abandoning many of the lower price points. So it's just all kind of going into the soup to kind of lead vehicle prices to be going up.
Unfortunately, it's that very desire that is leading you to financial ruin. So let's just assume for a moment that you're one of these people who bought a car and it's way too expensive. The reason your car is so expensive is because of the holdup with semiconductors during the pandemic, and the industry is still recovering, as well as high interest rates. What that means is that your car price is artificial. It does not really represent the market value of your car. So eventually, the price is going to come down. But you've already bought your car. So you're gonna be paying 20, 30, 40% more for a car that at some point is going to be closer to what it was before the pandemic. Keep in mind that repossession companies are looking for cars right now.
But other costs are still way up. Many people are having trouble paying their bills. And unfortunately, that is leading to a new trend. The repo man is getting more business. Alicia Smith takes a look at your rights so you don't waste your money.
I visited a local repo lot to get some insight into this current trend and also talked with an attorney with some good advice on how to protect yourself. The repos are rolling in at Rockwood Recovery in Roseville. Business has been booming.
It is really booming right now.
Jenny Leager co-owns the company and is the current president of the Michigan Association of Repossession Agencies. Are you seeing a lot more repossessions right now than, say, you were even a few months ago?
Absolutely, absolutely. Everything seemed to change at the end of May around Memorial Day. We just did double what we normally would do for June and July.
She points to the expiration of COVID unemployment benefits last year and inflation.
People have to make a decision. Are they going to make their house payment? Are they going to put food on the table? Or are they going to make their car payment?
There was a report that said that 1 in 3 cars right now are 30 days behind in their payment. 1 in every 4 cars is 2 months behind. And 1 in every 7 cars that you see when you're riding around in your car is 90 days behind. Repossession companies can't keep up. So they might see your car, but because there's another car they've been looking for 5 months, the banks are telling them, go get that car first. I don't like talking about these things without at least offering a solution. And again, this is not financial advice. If I had an old car right now, which I do, my car is paid off. I have 2 cars and they're both paid off. I'm even gonna say, if I didn't have a good relationship with my bank, I would go get a high interest loan, because ultimately that would be cheaper for me every month than going to go get a $70,000 truck. My monthly costs on those loans would be anywhere from $150 to $250 a month. No matter where I got my loan, I would take that loan and I would do some serious mechanic work on my car. Shocks, struts, maybe a light rebuild, valve cover gaskets and springs, things that breathe life into your car. And when you do those things, you know that you've extended the life of your car by another 100,000 miles. And I would patiently wait for the car market to crash completely. And I would also start putting some money aside so I could give a sizable down payment on my next purchase. But that's just me. Let me know what you think about the car market and what you would do in that situation in the comments. Like, share, comment, and subscribe. I'll see you on the next video.